Good evening all, hope you're doing well, you had a nice day. We're complacency again as we were yesterday, so we're sort of in between euphoria and fear. We're sort of sitting in the middle. The technicals are also in the middle at 55%, it's quite wishy-washy. US tech didn't really perform very well today. The VIX got crashed, the treasury yields fell, and the indices are it's not really doing much, to be honest. A little bit positive, not really anything to write home about. Like I said, the VIX is lower. US tech's definitely down a lot, but they have been up on a tear, and so this could be like a healthy retracement. It's quite interesting because Apple was up like 3% yesterday, and now we're down 1.5 or 1.4. So it's all a bit bonkers. So we might be. It looks like a bubble, doesn't it? Really, but it's all AI right now, so it's a little bit like the tulips in Amsterdam, where it was a speculation and those prices just blossomed. They just pumped due to the speculation, and really tulips are tulips, phones are phones, and you can even argue we've got AI on our phones anyway. If you've got Android, you've got AI on them anyway, so it's not really like a massive deal having AI on an iPhone because Android's had it for ages. So you can probably argue this is a bit of a speculative bubble on US tech. We have to remember this is just a healthy retracement, and you would want to be looking for buys, but probably not at the highs. Okay, big movements on Aussie. We had RBA last night, and a big move on Kiwi. A little bit of nothing to write home about on the others. They'd gone long dollar CAD and dollar Swiss, so these two can fall. And like you can see, they'd shorted Aussie there. This bit down here, it's negative, so they sold. And just like complacency, so not that much to write home about, not much to report. So they'd gone long dollar, but in the last 4 hours they've reversed that idea, and an hour ago they actually started to sell. So we're going to see a mismatch on the dollar today. So this obviously was a little bit taller, and it's come down a bit, as we can see. It's actually fallen 5%. So this was quite high. They were long, but they've reduced their longs. Okay, they're short Aussie, and they started to go long on the 4 hours. So in an ideal world, we get things to match, but we can see they've actually flip-flopped on dollar. And oh, there is something I just noticed, that they've gone long New Zealand dollar, New Zealand dollar, New Zealand dollar, and New Zealand dollar. So they are long from the start of the day, last 4 hours, an hour ago, and 30 minutes. So really, the New Zealand dollar can perform poorly, okay, because we got the ducks lined up. So yeah, that could be a good one. So you could look for New Zealand dollar sell, but what you'd pair it with, you'd want to be a little bit careful. If you were to trade it against the dollar, it's a little bit risky because we could be risk on. These could go quite positive. If so, the dollar's not going to perform particularly well. So if you're going to sell the New Zealand dollar, just be careful what you pair it with. It might be better to maybe trade it against Aussie, but just be careful because New Zealand dollar is a risky asset, and if you trade it against a safe haven and the indices perform well, it's likely going to be okay, and they might get paid. They might get paid on their bets. There's a potential scenario. QDB Scores, I guess. There's Aussie green, a little bit red creeping in here, and pound a little bit. Swiss has really gained today. You can see, look, pound Swiss, Kiwi Swiss, dollar Swiss, CAD Swiss, Euro Swiss. So we obviously saw a strong Swiss franc today, and there's a central bank interest rate decision from the S&P as well. That's something we need to be aware of. And we've got the BOE on Thursday, so I'm going to expect a lot of volatility on Thursday. It's usually quite good to trade cable at that, when we get those risk events, and they tend to go up to stop loss clusters, and you could use them to maximum efficiency and it's normally just a stop on BOE days. You may have seen my video from a long time ago in how they use the BOE risk event to target stops, and we often see a reversal at those stop loss clusters. So I did put out a trade earlier today, and it was on gold. So I'll come to gold and what it was. So prior to that crossover, we had this this bearish price action, and it was basically a sell, and it did okay. But what happened is that I made like a decent stop, and I basically it came down to get my 1R. So I made a little bit of profit. I could have made like a 4R on that trade, but it came all the way up, and I got out of 1R. So it's just slightly frustrating, but this is a good reason to have your FXCM trading station up on your screen, and you can see them selling it. If they sell it and we have a crossover, we tend to do okay. And there's that big move at the US retail sales. So we had a big pump, and then we had this decline, and that move there, this mouse that you can see has pushed them their positions down. As that fell, they sold, and so this is a trap. And the new hour began, and it reversed them. Okay, so that's how that works. Okay, so they basically see price action and then they follow it. Okay, and then by following it, they can get trapped. So they get momentarily paid, and then they get reversed. So you've got to be careful. No, we've got some resistance up here, and then we're going to have a heavy duty resistance up here, aren't we? So it all depends on the gravity, the enormity, and the conviction of them selling, because they could really sell it very heavily, and we could come up quite strongly. So be careful if you're short, okay? And it's just a good lesson to stipulate your stop and TP, because if you didn't stipulate your take profit, it would have gone probably to your stop loss. So you need to know where your exit is for take profit, and also for SL. A lot of people just think, oh, I need to set my SL, but you need to set your TP as well, because we see these things happen. We see these big reversals. You could have sold hit, and you might have thought, well, maybe we're going to go to 2000. I'll hold on. It's done this big move, and it's got back to your entry. So you definitely need to know where to exit for profit. Okay, so that's gold. And I guess we can just look at indices. The QDB bot opened one trade, and we had one loss today. So that's okay. We had a great week last week, but it just was not great conditions today, to be honest with you. So we had this descending channel, flip-flopped a bit, had a big heavy move, and we're creating a punishment box below, and we'll have an overlap of a punishment box. So we'll have two next to each other. So it's basically this candle here. So we've got an overlapping support. Right, so look where it hit as well. It hit it basically just at the candle wick high, and so it could be quite bullish. Boring as hell. I know if you're short this market, you might get a bit stung, but we'll have to wait and see. Sentimentally, we made two punishment boxes where they've attempted to sell it, got paid a little bit, got really bullied, and they got exasperated and frustrated, and then they thought, well, sod this, I'm just going to move my stop, or I might even remove my stop because it's so annoying, and I'm just going to hold short. And that's that action there, and this is that bullion tactic and that ruse, and so they're likely possibly going to hold from them selling here. Oh God, which I've seen many times before, and up we come. So yeah, it's just a bit nasty, and just sideways, right? So we're very sideways, and likewise, so I can't really comment on that. We may come back down to the punishment box. Likewise, the S&P, and I just said into Discord, is that we're probably going to have a move, a strong impulse move, and then it will shake them out and it will stop them out. Them getting out will cause the sentiment to shift, and then we can create a punishment box. So we want to see them less short. So we want to see this move, and this is only going to move if we have a move on the price action. Remember, the herd follow price, okay, and then they get reversed. All right. So classic case is here, for example. They'd gone long, and they'd gone quite long, quite strongly. So we had some heavy fallen there, 4 hours of decline, and then we had this pin, and up we go. And at that point, we made a punishment box. So let's draw that. And this is just like one example and how you could have used it. And you obviously got your stop loss there at the swing low, and you're looking to enter, and up we go. And that's it's very, 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 very simple. You're just waiting for the crossover, and then you've got your stop loss. But like I said in this video, you kind of need to know where your TP is. So if your stop's there, you could have probably got maybe a 5-hour trade. You could have got out, or you could have maybe put in a trailing stop. But then the trouble with having your TP static is that you probably could have missed out on a lot of profit. The thing is with the indices, like Arno was saying in here, it requires reasons to sell off and not reasons to rally. But by its nature, it's going to go higher, and for it to fall would be an unusual event. Okay, so we have to remember, naturally, the S&P is going to go higher. Okay, so this is the seasonality chart. Up we go, and this is 20-year range, right? The time frame over the last 20 years, right? So incredibly strong, and just going back to the S&P, is that they're just going to use any excuse to punish people. If they want it to go higher, but if the herd sell it, then it's a double win, because it's going to go higher anyway. And then if the herd sell it, they're going to get their stops, and so they're going to profit on their longs, and they're going to punish the shorts. And it is what it is, and just that's the nature of trading. So you need to make sure you're on the right side. And if you are short the market, you might be undergoing a little bit of pain this week. I said yesterday, we're probably going to see more of the same, where we're going to be like risk on. There's not much need for a strong dollar, and it is what it is, isn't it? So just basically my little comment on Euro USD is now the stops are up here. Now the reason for it is that they got, well, I'm going to say a rude word, but they got pissed off with getting stopped out and picked off, and so that action there tells me this was done from frustration and just a lack of just general feeling put out and feeling like they've been bullied, and this is then basically trying to outsmart the market, and they think, well, if we have a massively wide stop, it will be okay, but it could well target that now. All right, so that's a potential scenario, is that they've done it out of frustration and they might get punished. So it's basically teaching them really, really bad habits. And this is like exemplary of what not to do. You wouldn't want a stop as wide as that, because it's likely going to get probed. And that's a long way away. But we've got, potentially it's going to come up, and then we could sell off at the SLC. Fundamentally, this should be falling because of all the European politics and all that nonsense that's going on, where the dollar should appreciate. We have to remember we're quite risk on at the big picture. There's still 12 people short the market. There's still one person buying. So there's 12 bears versus the one bull. So those bears are going to have to get squished, and there's probably not that much desire for dollar for the USD. So that's today's video, and I wish you a good night. And if you are bearish, you're going to probably have a bit of a tricky week, and you may get a little bit of respite towards the close, the weekly close. So we'll just have to wait and see. So remember to trade safely, know where your TP is, and know where your SL is. It's really important.